Did the IRS delay crypto tax reporting until 2026? Well, right now on Twitter, there's a lot of inaccurate information out there, like this tweet from Watcher Guru that is sending people questioning what's going on. So, did the IRS delay crypto tax reporting requirements? The answer is no. What came out on December 31st from the IRS was Notice 2025-7. What is that notice and how is it different than some of the other notices that you've seen over the past 6 months? So essentially what this notice is doing is it's acknowledging that, hey, currently centralized exchanges like Coinbase, Gemini, Kraken, they're not ready to help users comply with specific identification accounting for gains and losses. What this means is in a previous revenue procedure from the IRS, they said, hey, if users contact the exchange saying, hey, I want to sell this specific lot of Bitcoin that I purchased on, let's say, July 1st, 2023, before this transaction that I'm about to sell my Bitcoin, then you have to, create mechanisms that allow them to specifically identify that lot before they make the sale on your exchange. Well, it comes not so much as a surprise that a lot of the exchanges do not have the infrastructure to allow, large user bases to essentially let them know which lot of cryptocurrency they want to sell before doing so. And so in the prior rules, the IRS said if the user cannot specifically identify a unit of cryptocurrency that they want to sell prior to the sale, the exchange must default to FIFO, or first in, first out. This can be to the detriment of taxpayers and users, especially in a bull market right now, because often the first tax lot of a cryptocurrency that you acquired might be the one with the lowest cost basis, so that when you sell it from an accounting standpoint using FIFO, it's realizing a large amount of gains. So what this notice 2025-7 is doing is it's giving investors and the exchanges a grace period for essentially accounting for which units of crypto get sold throughout the remainder of 2025. So at a high level, if the broker offers specific lot selection, most do not yet, you can use that. But if the broker, again, Coinbase, Kraken, Gemini, etc., doesn't have that capability, you can keep your own records identifying which lots you're selling at the time of the sale without notifying your exchange or broker, like the rules state that you have to. So this means you can use, any standing order in your records, like, HIFO, always sell my highest cost basis coins first, which is going to minimize my total gains, or last in, first out. But if you do neither, you need to opt to FIFO, and that's what the broker will do as well. So what about Revenue Procedure 2024-28, detailing, all about the safe harbor rules and reallocating your cost basis positions before the end of 24? Does that still apply? And the answer is yes. Investors still need to move to a per account or per wallet tracking method in 2025. The universal tracking method is not allowed. So this reprieve in, again, 2025-7 does not cancel out the need for users to move basis and account for gains and losses during the 2025 tax year on a per account basis. So the TLDR on this is this notice doesn't change anything for assets held in self-custodied wallets, but it does for assets held in centralized exchanges. Again, you still have to do wallet by wallet accounting. FIFO is the default, but you can do specific identification, again, like HIFO or LIFO, when trading on a centralized exchange without having to communicate the tax lots that you're selling to the exchange before making a transaction. So let's run through an example, as that's a lot of jargon. So let's look at two wallets that you have. And let's say on December 31, 2024, you allocated your outstanding basis for your held Bitcoin, which you're holding across 2 wallets, Coinbase and MetaMask, again, example purposes. And for each of those 1 Bitcoin that you hold in each account, the outstanding basis is $40,000 on that 1 Bitcoin. Then throughout 2025, you make a couple of additional buys of Bitcoin, one in February for $90,000, one in March at $80,000, and then you sell in June 1 Bitcoin for $100,000. The question is, what is your capital gain and how do you account for that? So let's run through that now. And here we go. So first of all, you still have to account for gains and losses on a per account basis. That means you cannot use assets held in MetaMask to account for this gain or loss that's happening on Coinbase. It's still siloed off to Coinbase's transactions. So here is the sale of $100,000 of Bitcoin, and you can see that your gain is going to be different. Let me move my face around so we can see this more clearly. It's going to be different under different accounting methods. First in, first out, last in, first out, and highest in, first out. Under first in, first out, my gain would be $60,000 because I have to account for my first tranche of tax lot of Bitcoin, which is the one that I allocated on January 1st, 2025, which was at a $40,000 cost basis. Thus, my gain is $60,000 when I'm selling that Bitcoin in June. Again, first in, first to be sold out. What about last in, first out? Well, in this case, I'm selling the tranche that I bought on March. That's the most recent one that I bought. It's the last asset in, last tranche in my records. And that's what's getting sold off from an accounting standpoint first, which leads to a $20,000 capital gain from this transaction. And finally, tax minimization, which is highest in, first out, is going to sell off my highest basis tax lot first, which would be the tax lot that I bought February 1, 2025 at $90,000. This would lead to a $10,000 capital gain. For anyone who needs assistance with tracking their transactions on a per account basis, crypto tax software like CoinLedger automates this whole process for you. You simply connect the wallets and exchanges that you've used and sync the transactions from them with a few clicks, bring in all the transactions. You can see them here within CoinLedger across all of your wallets and platforms. All of your cost basis, net proceeds, gains, and losses are tracked for every single transaction. And then you can generate the tax reports that you need for any given tax year based on all of that data with the click of a button. Short-term, long-term capital gains across all of the accounts and wallets that you've transacted with, all fully automated. You can then download the IRS tax forms you need or whatever your country requires from a tax reporting perspective. So you can get started completely for free and start tracking your portfolio and your taxes with CoinLedger today.